Good evening, everyone. Today is November the 17th, and this is the recording for November the 18th in the morning. This is Anne Marie, and this is what we're going to use as our setups for tomorrow because, as you know, I will be in flight. All right, let's talk a little bit about this. The big thing that I've drawn here is the VIX line, and I want you to see something. So it might be better for us to erase all these drawings and just have a look at what's going on with the VIX. So you'll notice that big up spikes that happen in the VIX come right after it's hit a low and it started moving up. So right now we've hit the lows, really very close to the lows of the year from this comparison chart. We haven't started lifting up, but these lows that we come into, these low pockets, they coordinate themselves with these little rotations to the downside. And so this is sort of a big September rotation. I'm not really sure we're going to have anything like that. But you will notice that we've got, take a look over here, this little rotation. It was damp for a long time, and then it just had a really big spike up. We had a fade, and then damp for a long time, really big spike up, which brought a fade, very, very choppy motion, damp for a while, small spike up, fade, and now we've got this. So if we look at the recent past, here's what we're seeing. We're seeing everybody throwing in the towel on the shorts and turning around and saying, hey, I give up. And what that's going to do is give us a big burst of buying action that's likely to fade. And so I still believe it's very bullish, but it's going to be better for us to wait for a fade that gives us what we need before we engage. All right, numbers based on that backdrop. Overnight, we could have a break higher here, 31.21, break below, 30.96. Listen, any kind of fade here should immediately try to bounce. If it gets lost, we're going to gravitate back to these lower edges near 30.74, and look at where the low volume profile comes in, all the way down to that 30.51, 30.46 zone, somewhere around there. And truthfully, as we take a look at this, old resistance does not become support until 30.36. I don't really think that we'll do that at this juncture, but we could. So I want you to be careful. I think the market is very skittish anyway. Let's take a look at the NQ. Same sort of thing, same kind of notion. Looking at this same behavior, folks. Just this sideways grinding in the VIX, and then all of a sudden it hits these lows, and it really starts to creep up, and then the markets roll over. We haven't seen that yet. What we want to see is the VIX start to creep up, and the markets not move, and then we know we've got ourselves a little bit of a pullback on the horizon. Right now, shallow pullback is going to give us the buy zones. That's the same thing we're looking for here. Look at our moving average. Look at our band, our bullish band here. Everything about these formations tell us that we've got upside pressure. Pullbacks going to be buy zones. Look for these areas to engage and watch your risk. Do not chase these charts. Don't chase them. We're going to have shallow pullbacks. If you don't get all of the motion, it's much better to wait and have a wish price that you want, relatively speaking, to a space, rather than jumping in and saying, you know what, I can handle the drawdown. Because a lot of times we think we can handle things when we really can't. Overnight, I expect these price actions to really potentially break out, but we really have had trouble holding overnight price action as we come into the early part of the morning, particularly European opening we start on that fade, and then once we open, we might spike, and then normally we sort of drag down into a space of support. That was not the case on Friday, of course, because it really expanded quite rapidly. Now we'll take a look at oil. Oil also in a rapid expansion. Interestingly, the VIX is really quite responsive here, right? It's really quite responsive. There's only maybe 1 or 2 areas of the VIX dipping down where oil did not spike to the upside. I found this to be quite interesting, that the VIX followed the general pattern of oil as well. So of course there is a relationship sitting in the broad market between the pricing of oil and the overall markets. It looks like oil is sort of pacing with the global slowdown chatter that we see, right? And this was a pretty nerve-wracking space for the Aramco deal, but you know, the broad market started tipping over for, I think, trade things, right? Here we are on the break. Take a look at where this is. Resistance all the way up here. First passes, folks. Momentum says that first passes should run into sellers. But what have we been doing? Really, it's really simple to look at here. This is the first candlestick in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of congestion that closed above the regions. Everyone has come into the area, and we've sold off at that zone. We held the close here, so the break up and over it is going to give us more buying pressure, right? We've got buying pressure all the way into 1 sigma, which is 59.75. I don't have any idea if we're going to get there in the near term, but it is an upside pressure event. So what are we looking at right now? Fades that give us pullbacks. Notice here, we have retraced almost the entire move of the prior candlestick with every forward day. So don't jump in early here. If you do, you might have to get out and reset at the baseline of support. I want you to be very, very careful with that one. Lastly, we take a look at gold. Gold is a little bit range bound, still in our channel, right? This is the channel we've been looking at for a long time. As we take a look at this, gold is, of course, going to have an inverse relationship with the VIX, right? It should. But here, the VIX is moving down and gold is moving down. Notice the VIX is moving up here and gold was moving down. The VIX moving down, gold moving down. So there's a strange relationship here that really does tell us, hey, as gold goes down, the VIX goes down, and we know that the markets go up. And it's not really a strange relationship. It's inverse, of course, to the broad market. Right now, it's a little disconnected. We have the downward VIX and this drag downward in price. So what we're going to look for is a capitulative sell-off in gold where people really throw in the towel and go, you know, once again, we were suckered by the gold bugs. They brought us in here, and this is not doing anything for us. Markets are going ahead. That's going to be the best time to buy gold. Okay? So my thought is, let it come down into the low volume node. I don't know how long that's going to take, but this channel, we actually drew it towards the end of August into September, and we've just kept extending it overall, and it's holding very interestingly. Now, could it hold in this pocket and move all the way up? Absolutely. But if we look at all the sectors, and we do think the broad markets and equities are going to hold higher, unless only the folks on the bond side that are really, really nervous about debt and leverage they're really the only guys holding this up now. And of course, they have the deepest pocket, so that's a big deal. But it could be a space of where they go, you know what, I'm just not going to buy any more of this. And then we're going to see a dip. Capitulative selling is going to be with another dip down in the VIX is going to give us a great bottom to look for. All right, that's it for now. I'll see you all tomorrow.